Okay, what is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis for Intuit stock because they just reported earnings. I made a small position in this like a month or two ago, but then as soon as I saw earnings were being reported today, I just bought two more shares, and so now I have around $3,000 in this. I'm really excited for this stock. I think this is going to be a very nice outperformer over the next couple of years. So let's get into the big news first. OpenAI strikes a deal with Intuit to plug personal financial data into ChatGPT, and pretty much this is a $100 million multi-year deal, and it's opening up data from Intuit's roughly 100 million users to OpenAI. Okay, but at the same time, OpenAI or Intuit is also going to be using OpenAI to make AI agents to help with some of their platforms. Okay, to forecast cash flow or draft tax filing, stuff like that. It didn't say how long the contract would be. It's interesting. It says they're not gonna they're gonna keep people's information private and stuff, which doesn't make much sense because they're using it for chat, but whatever. And then the rest of it is pretty much just about ChatGPT. So we'll skip over that. Then we come over to their earnings, and this is one of those stocks where it's super confusing when you look at GAAP versus non-GAAP numbers because they're way different. So normally I use Yahoo Finance, and in this case, Yahoo Finance is these higher numbers are the non-GAAP ones, meaning they're not adjusted. These are, before accounting for other things. So like this year it says they're going to do 23, or like last year it says they're going to do 20 to 23, but it's actually going to be 1367. So this is what they did for the whole year. Now it's up 31%, which is a lot. $13.67 for 2025, but chat said, or Yahoo says it's 23, right? So we'll see. And then this is 2026. So the numbers are, this company's numbers are so confusing and off. But, anyways, you can't calculate with this number because it's non-GAAP. And so when you factor in with the P ratios, like if you look at the P ratio here, it's like a 47 right now. You have to do 47 times $13 EPS or whatever it's going to be to get the current share price, which we were at, $630 or whatever. So just keep that in mind. But anyhow, the numbers are fantastic. 12% revenue growth. We're looking at, let's see. So again, $13.67 represents a 31% increase. Just very nice numbers all the way around. Then we get over here. Total revenue for the first quarter. Again, they're calling the latest quarter the first quarter. Yeah, the first quarter of 2026, which ended on Halloween of 2025. So it doesn't make a whole lot of sense, but that's just how they do it. Revenue is up 18%. Okay. Um, what do we got here? Here we go again with the GAAP and the non-GAAP. Increased GAAP operating income to 534 million, which is up 97%. Non-GAAP, which means non-factoring in accounting principles, which is kind of like their estimate, I believe, is 1.3 billion, which is only up 32%. Okay. So either way, it's phenomenal. But even with the gap, it's incredible that it's up 97%. And then we have diluted EPS. Let's see here. Gap, once again, this is what you would use for the PE ratio. It's trading. The PE ratio is based off of the GAAP earnings, not the non-GAAP. Okay, so keep that in mind. But these numbers are incredible. These GAAP numbers up 127% for EPS. So basically $1.59 for this quarter, and then they're doing what, 13 whatever, 13 something. So let's see. Do they say what is their forecast for net income? Do they say forecast for net income? So what else we got here? Repurchase 850 million in stock, 4.4 billion remains. Wonderful. That means they're buying back that much more of their shares, $4.4 billion. Approval for a quarterly dividend of $1.20, 15% increase. Very nice. Guidance, here we go. Revenue growth of $21 billion, up 12%. GAAP operating income of 5.7 to 5.8, which is 18%. Non-GAAP of 8.6, blah, blah, blah. GAAP, here we go. This is what we want. This is the important number right there. Because when you go to Yahoo Finance, it says 23 for the following year. That's not what it, that's non-GAAP though. We want GAAP so we could use the P ratio and get an idea of what the valuation is. GAAP diluted EPS is 15.5, let's call it 15.5. So 15.5 times, now as you can see, keep in mind the valuation is pretty cheap right now. That's why I just bought more shares. And look at it's I just bought my shares a minute ago at 640 bucks. Now it's at 660. So I think this one's going to be a very this is going to be a solid play. But 1550 for EPS next year. Okay, that's what they're going to do. Then we're going to go over here. And again, the P ratio is cheap relative. Look at the last couple years. It normally trades around a 60, a 55 to a 60, right? A 50 would be cheap, and then it goes up to like a 63. We're down to a 47. But so it's probably going to go back up because they just had a really strong quarter. So let's say it goes up to, I don't know, at least 50. I would say like 55. Multiply next year's GAAP EPS times 55, and you have an $850 stock. Didn't I do that right? That's what it should be. 15.5. Now that's if it goes to 55. Let's say it goes up just a little bit to only 50 times earnings. Then you're looking at a $775 stock. Still money to be made there. So that's kind of the way I see this. Let's keep going. So that's the most important number. Non-GAAP diluted. There's the non-GAAP of 23, which doesn't really help me any because I don't know. That doesn't help me because that's not what the P ratio on all these websites show. So it doesn't make any sense. Um, Intuit now it's guidance for the second quarter. Okay, I don't care about the quarterly basis. Okay, so that's it. That's it for that one. On to the next one. This is basically what we just looked at. Same thing. Non-GAAP EPS up 34%. So again, they do that. Non-GAAP is their version to try to give it. It puts in a different perspective so that it doesn't look like they grew EPS 127%. So that means there were some other charges that they didn't. Like I think I asked chat here. So the adjustments into it includes for non-GAAP. The following items are excluded from Intuit list. The following items are excluded from non-GAAP. Amortization, restructuring, share-based compensation, all of that. Okay, so when all that goes into GAAP, that's all factored into GAAP EPS, right? For the net income and diluted EPS version, they also include gains and losses on debt securities, other investments. So gains and losses on executive deferred compensation, goodwill, gains and losses on disposals of business and assets, professional fees, okay, blah, blah, blah. Amortization of acquired technology. So this is being excluded from the non-GAAP and it's included in which GAAP is generally accepted accounting principles. Okay. Now let's go back here. So yeah, so we looked at those numbers. We looked at these numbers, even though these numbers are off. We can come over here still just to look at P ratio 47, right? What does it say on Qualtrim? Same thing, 46 and 27. Okay, so anyways, the valuation is cheap. That's the point here. That's the point. We come over to their numbers. Phenomenal revenue growth. Revenue by segment. This will be interesting for this one because they got different businesses. So small business and self-employed taxes, 11 billion. Credit Karma, 2.2 billion. Okay, so those are interesting. How about this one? Revenue by service and product. Okay. EBITDA looks nice. Net income, record highs, 3.8 billion. Free cash flow, sort of stagnant, but still good. EPS, again, $13, $14. Cash to debt is not great, but it's okay. Dividends, I like that they're growing dividends that much, 15% a year. That's really nice. Shares outstanding, they're buying back shares on. I just realized that they're doing both. They're buying back shares and they're paying a dividend. That's really nice. And that's pretty much it. Then we come over here, and yeah, all the numbers look good. So I think again, I think the stock's going to be $800, $850 next in a year from now. That's kind of my perspective on this. So let me know what you guys think, and I will see you in the next video.